Understanding a new concept in this question again. A company is considering its working capital investment and financial policies for the next year. Estimated fixed asset and the current liabilities for the next year are 2.6 crore and 2.34 crore respectively. Estimated revenue, sales and EBIT operating income depend upon the current assets investment, particularly stock and debtors. The financial controller of the company is examining the following alternative working capital policies. There are three working capital policies. The first is conservative, second is moderate, and the last is aggressive. In each of them, what would be the investment in current assets is provided to us, what would be the sales is provided, and what would be the operating income is given. After evaluating working capital investment policy, the financial controller has advised the adoption of, highlight the portion, moderate working capital investment policy. The company is now examining the use of the long term and short term borrowing for financing the assets. The company will use 2.5 crore of the equity funds. Corporate tax rate is 35%. The company is considering following debt alternatives. There are three financing policy: conservative, moderate, and aggressive. In each of them, what is split between short term debt and long term debt is given: 0.54, 1.12, 1.66, and 1.5 and 16%. Sorry, 0.16. On an average, rate of interest would be 12% and 16%. You are required to calculate the following: working capital investment for each of the policy. That is, for working capital policy, you are required to find net working capital, rate of return, and current ratio. For financing policy, again three things: net working capital, rate of return on shareholders equity, that is return on equity, and current ratio. I request all the students say to go through the question, and then we'll discuss how to do answer. Just go through the question, all of you, first of all. So we are going to make the calculation for the working capital investment policies. So please write down a heading: calculation for working capital investment policy. I request all of you to pay attention. First of all, I am giving you some explanation. We'll have the calculations to be made first of all, and then we are going to understand the concept. In the calculation, we will have column number 1 as serial number. We'll have the column number 2 as particulars. Opposite to that, we will be having working capital policy. There are three working capital policies provided to us. One is conservative, another is moderate, and the last is aggressive. There are three working capital policies that say we have, and for each of them we are required to make the calculation. How to make calculation, that is what we will discuss first of all, and then we'll understand the interpretation of the calculations which we are making. Please draw a table like this. So friends, the question is providing that say you are required to compute for the working capital investment policy net working capital. Then rate of return. Dear students, the rate of return is required to be understood as return on asset. and current ratio, that is the normal current assets upon current liabilities. We have been provided with the information that say whatever may be the working capital policy that we have, the amount of the current assets is going to be same 2.6 crore and amount of the current liabilities will be same 2.34 crore. I am first of all explaining only the conservative policy calculation to you. Then for moderate, I want you to do answer first, then I will do. For aggressive, I want you to do answer first and then I will do. I request all of you to pay attention properly. See, in the serial number column, I am writing 1. In the particulars column, I am writing fixed asset. The question is providing the fixed asset is an amount of 2.6 crore. So I am writing over here 2.6 crore. In the serial number column, I am writing 2. In the particulars column, I am writing CA. The term CA stands for current assets. The current assets is an amount of 4.5. Because for the conservative working capital policy, current assets is provided as 4.5. Serial number 3, in that it is 1 plus 2. Wherein we have TA, TA stands for the total assets. In that case, it will be 2.6 plus 4.5, that is 7.1. Fourth is CL, current liabilities. It is 2.34. 5. In that, EBIT, that is operating income. In case of the conservative working capital policy, operating income is 1.23. Now, this is what's the basic calculation that say we can understand. Now, the question does not end over here. Now, the important point of the question starts. I hope that everybody understand that on the right hand side of the assets, we have the total assets, and on the left hand side, we have the current liability and operating income. The first question is you are required to compute the working capital. So, on 6th number row, in that say we are going to calculate the working capital. It will be calculated as row number 2 minus row number 4. So what will happen? It is 4.5 minus 2.34. That comes to 2.16. That is what's the working capital. Next, the question says that compute the rate of return. So 7th number, rate of return. The term rate of return stands for return on the total assets. It will be calculated as operating income, that is 5 number, divided by the total assets, that is 3 number. So 5 upon 3. So I am writing over here 7 number item will be calculated, 7 numbers row, 5 upon 3 into 100. Five is 2.3, sorry, 5 is 1.23 operating income upon total assets. So the rate of return stands for return on total assets. Next is 8th number item, wherein we are required to find the current ratio. So as far as the rate of return is concerned, it is calculated as operating income 1.23 upon total assets 7.1 into 100, that is 17.32%. Next is current ratio, CA 4.5 divided by CL 2.34, that is 1.9231. That is the way the current ratio is formed. This is what we are required to do. This is in case of the conservative, and similarly we are required to do for moderate and aggressive. Once we extract the data, we'll be able to do analysis. Please write down answer for the conservative, and for moderate try to do answer. and put your answer in the chat box. So as far as the current ratio is concerned, it is calculated as 2 divided by 4. Now in case of the moderate, we have to work out the answer like this. Fixed asset is again 2.6. Now the current assets will be taken as 3.9. That is this. 2.6 plus 3.9. 6.5. Current liability same 2.34. EBIT will be 1.15. As far as the working capital is concerned, it will be CA 3.9 minus 2.34, 1.56. The rate of return, in that case it is EBIT 1.15 divided by total assets 6.5 into 100, 17.69. Next is the current ratio. In that CA 3.9 divided by CL. CL is 2.34. 1.67. Try to do answer for aggressive and put your answer in the chat box. Next, in case of aggressive, fixed asset it is 2.6 once again. Current assets will be 2.6. Okay. Total assets is 5.2. No change in the current liability. Operating income will be taken as 1. Working capital is CA 2.6 minus CL 2.34. That comes to 0.26. Rate of return, EBIT is 1 divided by total asset is 5.2 into 100, 19.23. Current ratio, in that CL 2.6 CA 2.6 divided by 2.34, that is 1.11. This is the way the current ratio can be found. Please write down answer. Now friends, a number of times say there is one more ratio that say they are expecting us to calculate. It is current assets to fixed asset ratio. It is calculated as current assets upon fixed asset. So just I am writing it additionally. So 2 divided by 1. That is the way it is supposed to be found. So it is 4.5 upon 2.6. So 1.7308. Next it is 3.9 upon 2.6. 1.50. In the last case it is 1. This is the way we are required to find current assets to fixed asset ratio if they want us to calculate. Now see, the calculation portion is over. Now we are going to have understanding of say some conceptual point. The question does not provide us to pass any comment. However, it may be required that say we are required to pass any comment, and this is of course whatever the question that we are doing is part of any concept. So over here the concept is something like this. Whenever we are supposed to make investment in the working capital, then in that case we are required to decide that say how we should make investment in the working capital. We may be conservative in doing business, we may be aggressive in doing business, or we may have a moderate approach. The conservative approach means we have a fear of losing business. So we always make sure that say we give credit to the customers more than what others are offering. That is conservative. We are keeping the safety stock level high so that say we will be able to entertain the customer even with a short notice in which the customer wants us to deliver the goods. So in case of the conservative, what will happen? In case of the conservative, the current assets investment will be more, and with that say we will be having say the total assets more. With the increase in the total assets and current assets, what will happen? Say the current ratio is going to be more, current assets to fixed asset ratio will be more, we will have the working capital more, all these things are going to increase. So basically you are not going to face any liquidity crisis. So technically it is given a name as so the risk of insolvency. The risk of insolvency is going to be lowest in case of the conservative policy. However, everything comes with a price. So what happens that say you are having say the more current assets in the business, more total assets in the business. Because of that, so the rate of return of the company will fall down. And over here, say we understand that say the rate of return is lowest, it is 17.32%. So return is also going to be lowest. In case of the conservative working capital policy, listen carefully, current ratio, comma, working capital, comma, current assets to fixed asset, all these ratios say are going to be more. So we understand that say all these ratios are going to be high. Why? Because you are having say the more investment in the working capital. Exactly opposite to conservative is aggressive, wherein say you are very much confident for your product, so you don't care for the customers. You give tight credit period to the customers. If the customer does not pay in time, then in that case you want the customer that next time please don't approach me for the credit. See, money is important for you, then it is important even for me. So make sure that say you are selling goods, that is you are making payment to me on time. Otherwise, please don't come to me next time. We keep reasonable like the stock level in the godown. If at all there is any call for the urgent delivery of the goods, we straightway say no. We usually take this time period and say this is the time period in which we are going to deliver goods to you. Are you interested? Then in that case I'll book your order, not otherwise. We are very confident for the quality of the goods that say we provide. So we don't care for the customers. That is called aggressive. In that case, what will happen? Your current assets investment will be less. So your current ratio will be less. So your working capital will be less. So your current assets to fixed asset ratio will be less. So what will happen? All these things are going to be less. However, in that case, what will happen? Say your risk and return, both of them increases. We understand that so the risk of insolvency will increase. There are fair chances that say when the payments are required to be made, you don't have funds. So in that case, so the risk increases, and of course you are having so the less investment in the business, so your return is going to be highest. You can see that it has a return of 19.23, so the return is going to be highest over here. This is what we understand. And in case of the moderate, we understand that say everything will be in between. Everything will be in between. That is what we understand. Please write down this much and then I'll dictate a note to you. I request all of you to write down further answer. A company can have one of the working capital policy. Full stop. company has conservative working capital policy, then it will have more investment in current assets. So with that, A, current ratio, B, working capital, C, current assets to fixed asset ratio will improve. With paragraph write down. However, in that case, total assets increases. So rate of return is decreasing. In that write down further, conservative working capital policy is adopted, when a company has fear of losing business. Full stop. This policy has less risk, less return. With paragraph write down, aggressive policy will have exactly opposite situation. Full stop. It will have lower current assets. So current ratio, working capital, current assets to fixed asset will be less. Full stop. However, in that case, return on asset will be more. Full stop. Further write down in that, this policy shows that company is very confident for its products. Full stop. Importantly, in this case, risk of insolvency will also be more. Full stop. With paragraph write down, moderate working capital policy will result into all values in between conservative and aggressive. This is what we understand. The question says that, say, for financing policy, we can see that, say, there are three financing policy given: conservative, moderate, and aggressive. You are required to calculate net working capital position. So I request you to write in the chat box that what would be the working capital for conservative working capital policy. I want only one answer. What is the working capital for conservative working capital policy? Please put your answer in the chat box. So now friends, we are required to make the calculation for the financing policy. So I request all of you to write down answer along with me. Calculation for financing policy. Again, we will have the same kind of the table. Table number 1 is serial number. Wherein we will write the references. Column number 2 will be particulars, and opposite to that set is the financing policy. Three financing policy. The first one is conservative, second is moderate, and the last one is aggressive. Again, I will give explanation of the first one only, that is conservative. Then I would like you to do moderate, then I'll do aggressive, then I will do. This is a sequence in which we'll do answer. I request all of you to pay attention. You visualize the asset side of the balance sheet. So row number 1. In row number 1, I am writing fixed asset. In row number 1, I am writing fixed asset. The amount of the fixed asset is given to us in the question as 2.6 crore. Then row number 2, in that I am writing current assets. See, the important point of the question is this, wherein I think that's a number of times students commit mistake. After evaluating working capital investment policy, the financial controller has advised the adoption of moderate working capital policy. That is the question. So we understand that, say, the moderate working capital policy will be adopted. And if at all the moderate working capital policy is adopted, then in that case, this one, the current assets investment will be 3.9. So we are required to take the current assets investment as 3.9. So visualize yet the asset side of the balance sheet. So 3 is equal to 1 plus 2 is TA total assets. So 2.6 plus 3.9, that comes to 6.5. Now you visualize the liability side of the balance sheet. Equity share capital. You can see that the question is providing the information that the company is going to use the 2.5 crore of the equity funds. So equity share capital on the liability side is 2.5. Yet liability side explanation is going on. Current liabilities. The current liabilities has already been provided to us. It is 2.34 crore. So it is 2.34. So you visualize that the asset side is over. On the liability side, you have the equity share capital, yes. You have the current liabilities, yes. So 6 number row is total debt. As far as the total debt is concerned, it is calculated as 3 minus 4 plus 5. So we understand it is 6.5 minus 2.5 minus 2.34. So the total debt is 1.66. Now the total debt is divided into two parts. You can see it is a short term and long term. So you can understand at say 0.54 plus 1.12. It is 1.66 exact. So we will be having short term and long term. So seventh number row. In that, so the short term debt, it is an amount of 0.54 crore. Eighth number row, it is long term debt. It is 1.12. Ninth number row, it is operating income, earning before interest and taxes. Since we have adopted moderate working capital policy, we will have EBIT of 1.15. That is this. So I'm writing over here, it is 1.15. That is the way we can make the calculation of the EBIT. 10 number item, it is interest. It is calculated as short term debt, that is 7 number, into rate of interest, plus 8 number long term debt into rate of interest. That is the way the total interest is found. 11 number, it is EBT. It is calculated as 9 minus 10, EBIT minus interest. Income tax rate is provided to us 35%. So 12 is equal to 11 into 0.65. That is earning after taxes. Next is, because there are a few questions which we are required to answer. In the first question, it is the working capital that we are required to find. That is 13 number. Okay, tax is 35%, so EAT have taken 65%. Now working capital will be found as CA current assets 3.9, CL 2.34 minus short term debt 0.54. So we understand it is 2 minus 5 minus 7. So it is 2 minus 5 plus 7. 5 and 7 would be added and that would be deducted from 2. 14 number question. Rate of return on shareholders' equity, that is return on equity, that will be computed as earning after taxes 12 number divided by equity share capital. Amount of the equity share capital is 2.5. That is 2.5 is in which row? It is in row number 4. 12 upon 4 into 100. That is the way the return on equity is calculated. And the last is the current ratio. That's very simple. 15 number. Current ratio. The way we have computed the working capital. So it is 2 divided by 5 plus 7. Okay. Instead of deduction, you have to add. This is the way you are required to prepare the simple table to make the calculation for the financing policy. The important point of the question is you have to take the moderate working capital policy. Please write down answer for conservative. For moderate, you do answer, then I will do answer. Let us do further answer. I'll do the numericals now. Amount of the interest will be calculated as the debt is 0.54 into 0.12. That comes to 0.0648. 0.0648 plus long term debt is 1.12 into rate of interest is 0.16, 0.1792. So 0.0648 plus 0.1792, that is 0.244. It is deducted from 1.15, so it is 0.906 into 0.65, 0.5889. Working capital, that is current assets 3.9 minus current liability is 2.34 minus long term debt, so short term debt is 0.54, so it is 1.02. As far as the return on equity is concerned, it is earning after taxes 0.5889 upon 2.5 into 100, that is 23.556. Current ratio will be calculated as current assets upon current liabilities, that is 2.34 plus 0.54, so 2.88, so 3.9 upon 2.88, 1.3542. That is the way the current ratio is found. Next, moderate, in that fixed asset will remain same. As far as the current assets is concerned, it is 3.90. So this is again 6.50. Equity share capital no change. Current liabilities no change. Total debt no change. Now the split between short term and long term will change. You can see that the split is 1 and 0.66. So for short term it is 1 and for long term it is 0.66. Operating income no change. Amount of the interest, it will be calculated as again the short term debt financing is 1 and the rate of interest is 12%. So it is 0.12. The long term debt is 0.66 into rate of interest is 0.16, 0.1056. So 0.2256. That is deducted from 1.15. So it is 0.9244 into 0.65, 0.60086. As far as the current ratio is concerned, it will be found as current assets that is 3.9 minus 2.34. 3.9 minus 2.34 minus 1. It is 0.56. Return on equity, it is 0.6086 divided by 2.5 into 100, 24.344. Current ratio, in that it is current assets upon current liabilities. Amount of current assets is 3.9 divided by 1 plus 2.34. 3.9 divided by 3.34. 1.1676 or 1.1677. That is what we understand. Next, it is aggressive. In case of aggressive, the same thing will be there. Fixed asset, it is 2.6. There is a small error on my end. It is 0.9244 into 0.65, 0.60086. Divided by 2.5 into 100 is 24.0344. So let us understand for the aggressive one. Fixed asset 2.6, no change. Current assets, no change. So the total asset would be total of both of them. Equity share capital 2.5. Current liability is 2.34. Total debt is same. Short term debt is 1.5 and the long term debt is 0.16. Operating income is 1.15. Amount of the interest, in that case it is 1.5 into 0.12, so 0.18 plus 0.16 into 0.16, 0.0256. 0.2056 deducted from 1.15, so 0.9444. 0.61836, 386. As far as the working capital is concerned, 3.9 minus 2.34 minus 1.5, it is 0.06. Then 0.61386 divided by 2.5 into 100, 24.5544. Current ratio, in that 1.5 plus 2.34, it is the part of the denominator, so it is say 3.84. So now 3.9 current assets divided by memory recall, so 3.9 divided by 3.34, so 3.9 divided by 1.3.84. 1.0156. This is the way the current ratio is calculated. So for the financing policy, we have made these three calculations. Now we have a discussion with respect to the financing policy. Basically, there are three financing policies that we have. One is aggressive, second is moderate, and the third is conservative. Dear students, what will happen in each of the case? That is what I just discussed with you before I dictate a note to you. So basically what happens at in case of the moderate financing policy, we will be having long-term finance for long-term investment. So whatever the fixed asset investment, whatever the working capital investment, which are for the longer period, that will be from the long-term financing. Equity share capital, debentures, retained earning, preference share capital, and so on. And short-term investment will be from short-term financing. So ideally what you should do is this, and that is what's given a name as the moderate financing policy. In case of conservative, what will happen? Let us understand. In case of the conservative, you will be having, so the investment, you will be having financing. You will be having financing for long-term investment, long-term finance, for short-term investment, short-term finance, and also long-term finance. So in order to finance the short-term investment, you'll go for the long-term financing. Why? Because you do not want to meet to a point wherein you are not able to make any short-term liabilities payment. You want to make sure that, say, you want to do business with relaxation. You do not want a situation wherein you are not able to make the payments in time. That is the reason, say, you will be having the short-term investments to be made not only from the short-term funds but partially from the long-term funds, even though it is expensive. So in case of the conservative policy, what will happen? You will be having a situation that you will be having, say, the long-term investments, that is, say, the long-term financing more. So what will happen? So it will result into a situation that, say, you will be having current ratio more in comparison to moderate and in comparison to the aggressive. You will be having, say, the working capital more, again in comparison to the moderate and aggressive. You will be having, so the return less. Why? Because your expenses have gone up. That is the reason, so the return will fall down. Your working capital and the current ratio will increase in case of the conservative. The last one is the aggressive one. What will happen in case of aggressive one? Again, in case of aggressive one, you are always concerned to save money. So what you will do? You will be having, say, the short-term investments to be made with the short-term financing. In case of aggressive, what will happen? For short-term investment, you will have the short-term financing. For long-term investment, you will have again two things. One will be long-term, and you want to save money. So you will have certain portion by the short-term investment, that is, say, the short-term financing. You can see that over here, the rate of interest for the short-term is lower than the long-term. So you will be able to save interest if at all you have certain financing, say by way of short-term financing, and with that, so you will be able to reduce your interest burden. So for the long-term investment, you will have the long-term financing as well as short-term financing. So what will happen? Since there is an increase in the short-term debt, your current ratio will be less. your working capital will be less, and since the interest cost reduces, your return will be more. That is what we understand. This is the kind of situation that you will have, and in case of moderate, everything will be in between. This is what we understand. You can see the results like this. In case of aggressive, current ratio is lowest. In case of conservative, it is highest. In case of working capital, it is 0.06, very marginal. It is highest 1.02. However, you can see that's over here, say the return, it is highest in case of aggressive and lowest over here. So, one more thing that we understand, as far as risk is concerned, risk of business is less over here and the risk of the business is more over here. That is what we understand. So this is what the concept that we have over here, say in this question. Of course, we do not have to write anything in examination unless there is an express point that you are required to pass comment for all of them. So just write on a small note. First point. In case of moderate financing policy, the company will have short-term financing for short-term investment, long-term financing for long-term investment. Second point, in case of conservative policy, comma, the company will have long-term financing for long-term investment and partial short-term investment. Full stop. In case of aggressive policy, firm will have short-term financing for short-term investment and also for a part of long-term investment. Third, conservative policy will have low risk, low return. Aggressive policy will have more risk, more return. Full stop. Moderate policy will have all values in between. Full stop. So, a small summary of the entire answer. First of all, in the working capital policy, we are required to make the required calculations, and that's the rate of return stands for the return on assets, current ratio, working capital, that is the normal thing that we have to find. We understand that the conservative working capital policy means more investment in the current assets. In that case, the current ratio and the working capital will be more and the return will be less. Next is a financing policy. In case of the financing policy, importantly, we have adopted the moderate working capital policy is say something that you have to understand properly. So taking the values from the moderate working capital policy and the three financing policy, we have to calculate the answer. First of all, assets on the liability side, equity, current liability, total debt. Total debt is divided into two parts, short term and long term. Operating income minus interest EBT minus tax EAT, then working capital, return on equity and current ratio is calculated. Afterwards, say we will be having say a small summary of the working. Just once again same. In case of conservative, risk and return will be less. In case of aggressive, return and risk will be more, and say in moderate it will be in between. How you are going to have the financing with the short term and the long term funds, that is also what we have understood. We can see that say the aggressive policy is having say the 1.5 crore of the short term funds and just 0.16 of the long term. In case of conservative, huge 1.12 is the long term and 0.54 as the short term. Current ratio you can see 1.0156 only. Working capital is just marginally 0.06 in case of aggressive. Exactly opposite in case of the conservative, it is 1.02 and 1.3542.